let's kick off with Japan. And I wonder what your take is with, of course, the snap elections, the fiscal related concerns. Never really went away and coming back in full force on markets right now. Do you believe these Takaichi trades will continue? Does the Prime Minister have room to run with her ideas right now?
Yeah, snap instructions are actually very much needed. The fact is that there's a lot that needs to be done on the fiscal side, and the fact is that if there isn't specifically enough momentum behind her, it's going to be very difficult for her to really implement a lot of the fiscal policies which is needed. The fact is that we know that the Japanese economy needs to continue to have a strong recovery, continues to have strong growth, and the fact is that earnings growth continues to be strong. And so she's using that momentum right now with what's happening with the Japanese economy to really try to do more, because if she doesn't do it, then it's going to be difficult to maintain specifically or sustain specifically this type of trajectory that we've been seeing with the Japanese economy for the past few years.
And I thought it was interesting, some of the points that you raised in your notes. Given the fallout between Japan and China over Taiwan related remarks by the Prime Minister of Japan, some of the investment implications that you can draw perhaps, because you say Japan losing out more than Japan if there is an actual economic and trade fallout.
Yeah, there's potentially, again, we've seen over the past few years that geopolitical tensions could lead to specifically short-term opportunities for investments as well. And so this is kind of where, again, a lot of times it does take a bit more time to see how things play out. But then depending on certain situations, then, for instance, in certainly some of the industrials or some of the machinery side, there are definitely opportunities, especially if there are more geopolitical tensions, because there is going to be a growing demand for domestic specific products. And so this is where, kind of short-term opportunities do present itself given sort of these rise in geopolitical tensions.
And you mentioned industrials. So what are some of the sectors that could actually see some damage if this fallout with China deepens and widens? Because I think you were sort of, indicating the need for Japan to get to China's critical minerals and so on. What are some of the other leverage that China has at this point in time?
No, I mean, the fact is that some of the heavy machinery, China can really specifically rely much more on its domestic heavy machinery areas. And so, when we focus on a lot of different industrial related plays, this could be a very strong sector where China goes much more focusing on its domestic side. But the one thing you also have to understand as well is that, Japan domestically is also looking at opportunities there as well. Because when you look at Japanese industrials or even Japanese material companies, especially around the small and mid-cap space, we feel that there's a lot of opportunities given where valuation levels are, where, stock picking in Japan and certainly in those sectors do make a lot of sense. And then particularly when we went back and circle back to China, again, within the industrial side, especially domestically on the Asia markets, there's a lot of opportunities right now given where valuations are.
But I mean, Ken, in terms of industrials, right? I mean, the fact of the matter is nobody can make stuff or do stuff like that at scale than China. I mean, hands down, nobody beats them, right? Yes. The problem there is it's still incredibly competitive. They've got this whole, what do they call it again, involution thing going on. It's literally Hunger Games. It's a price war, right? So you need to be really careful who's going to survive. Is it going to be companies that are able to push out, expand abroad, set up capacity manufacturing?
Yeah, that's always, one key area, like similar to what we saw with the EV space in China. Yeah. The fact is that you have a very strong, sort of production, and then the fact is that then you can start exporting a lot of your expertise to other countries at a much lower cost as well. So again, that is a similar play. And in this situation, it's also looking to see where the demand is, right? If we see a large global demand, if you have very attractiveness in terms of prices, that's really where the opportunity. I mean, we're gradually getting there. And at the same time as well, when you look at industrial plays, overall valuations are actually, not that demanding. And this is kind of really where some of those opportunities could, sort of present itself.
Okay, so here's the thing for you. When we talk about China as a maker, as a maker country, right? But on the software side, AI and apps, etc., what do you make of the fact, and this has been a number thrown around for a couple of weeks already, right, that over in Silicon Valley, folks walking around over there, every other app on people's phones, right, for AI, it's a Chinese app. Does that surprise you? What does that say?
No, I mean, there is definitely a lot of demand. I mean, again, even before specifically DeepSeek from last year, there's been a lot of R&D that's been going into AI, in China for the past few years. I think it was just that moment in terms of when it was announced last year around this particular time that, people start, especially a lot of global investors, start to see, hey, there is actually a lot that's being developed. And so this is kind of really where that push on AI, and more importantly, AI CapEx, right? This is kind of where the trade has been in the past couple of years. It's really been the whole ecosystem. It's really been companies spending a lot of resources in terms of really growing their CapEx around AI. And China is no different. And the fact is that they've been doing this now for the past few years. And, you're starting to see a lot more things coming to fruition, being the fact is that they've been research and developing for so long.
Yeah, let me ask you, I mean, this whole question or worries over funding of AI CapEx, right? Is it less of an issue with China? Because in the U.S. with the hyperscalers, okay, CapEx, you're averaging at about 70%. There's only so much more you can squeeze. So let's go to debt markets to fund it that way, right? With China, right, this is a whole of government effort, right? And there is state credit being directed at China AI, no?
Correct. And again, it gets to a point where profitability does have to come to play eventually. Yeah. The fact is that you can't just have CapEx and then nothing to show for, in the next few years. So I think everyone really wants to have a dominant position, to have something which is going to be very unique if possible. And then at the same time, how do you start to monetize specifically some of those, developments that's been going on? So in the next couple of years, there's definitely going to be a lot more of that. And again, even recently, when people talked about this whole AI fatigueness, I think it's more to do with not necessarily not wanting to increase or spend on developments, but I think it's now getting to that next stage as to how do you start to monetize specifically more of these developments that a lot of companies have been having in the past few years on AI.
Indeed, make some money. Yeah, Sherry?
Yeah. Yeah, and Ken, that's really related to the AI model companies, the code providers. What about the hardware angle? Because now I feel like, and sort of towards the end of last year and potentially a story that carries on in 2026 is really about the hardware side of the story, that memory prices are going through the roof here. Are we seeing an actual shortage because the demand is so high, or is it really a story of countries and companies somewhat hoarding because of paranoia, because of the geopolitical complexities?
I think it's a little bit of both. The fact is that we've seen how the U.S., we've seen how South Korea, we've seen specifically how Taiwan has been a very big benefactor to specifically this notion. The fact is that earnings growth for these particular countries, and again, here in Asia, we look at South Korea, we look at Taiwan, earnings growth for a lot of the hardware companies have been tremendous. The fact is that when you look at China and what they've been saying in terms of having a lot more tech self-reliance, a lot more on the chip side self-reliance, the fact is that right now, China consumes roughly about maybe 20% of its own produced products. It wants to increase that number up to about 40% by 2027. So the fact is that because there's a lot of news that comes out from various countries wanting to, sort of have more investments, want more domestic reliance, specifically want to invest more. This is kind of where you're seeing kind of the markets really, sort of keep driving up stock prices because of a lot of this news that comes out. And of course, at the same time, earnings has also been a very strong backing behind a lot of these companies as well.
So on that note, how do you view the semi-names, the memory names in South Korea? I mean, they had, what is the word for it to describe their performance in 2025? A stellar, just unbelievable run-up. Do they have more it's just the story, some of the bullish numbers that, folks at Morgan Stanley, for example, came up for Samsung's. I mean, is this just the beginning, and is this something that's not cyclical anymore?
Yeah, it's hard to say whether or not we're at the beginning, in the middle, or the end. But the fact is that when we look at earnings growth, it's still very strong. The fact is that, this isn't just overall improving sentiment. The fact is that you do have backings from strong earnings growth as well, especially in South Korea for a lot of the sort of the hardware, the tech hardware names. And so as a result, this is why we feel that in 2026, there are still going to be opportunities, because the fact is that you're continuously getting more re-rating of these particular companies because of strong prospect for earnings growth as well.